Sieht man gar nicht, gell?
Hello, hello. I hope you can hear us and see us. Let's get the chat here too. It's the first live stream since 2 years, so hopefully everything's all right. So here will be the chat.
That's good, so hopefully everyone... Hello, everyone. I think so, they can hear us.
Yeah, should be all right. Audio stream looks good, I think.
I have to go closer to you. Look at this. Look
If
at
not, also last time, like for the last live stream, the first 6 minutes I was talking to myself.
Oh, yeah?
Yeah, and then somebody in the chat said, "Is this guy talking?" So.
There you go. I'm going to be close to you like that.
All right. So we basically want to talk first live stream in 2023. Exciting times, huh? We're going to talk about real estate today. And we brought a couple of questions. If you have questions, let us know. We'll have the chat open. Other than that, we asked you guys on social media and looked at our comment section to see what may be of interest for you guys. Let's see what we got.
Well prepared over here.
Keep in mind, guys, that this is not a TV production, so...
Ah, come on, Axel. Why? Why you didn't, you know?
So... First question is about a very religious topic, of course. The crash.
Boom.
And now you can see it. Damn!
There you go.
Looks good, huh?
You guys, you have to imagine it's like a cinema over here. So it's kind of, we have
It's crazy, yeah.
all type of screens.
Like this, huh? All right.
Let's talk about the crash. Axel.
Let's talk about the crash. We have some. What are the comments? So we have GP and Yaraya. German property prices have begun to crash. And then we have Alan Houston saying basically the exact opposite. That apparently, even though in Sweden, 2008, if you guys remember, global financial crisis, and prices didn't really fall back then. For me, extremely religious discussion, right? It's almost like the rent and buy where we had the video just a couple of days ago, or public-private health insurance. This is extremely religious topic of prices are gonna go down or crash even, right? Not prices gonna go down, it's always crash and hammock. My issue is basically, that's why we also replied to the comment, that these crash profits, let's call them, they never have a source. Maximum they say Google it or something, and thank you very much.
You helped me a lot. You helped
wow. But there's always a source missing, is at least what I'm feeling. And for me, so that I can do it better, for me it's a very simple calculation. For me it's just the three things that you see here, like here. How does this work?
No,
Here,
I think it's yeah.
this plus this equals this, right? So the first one is basically how many people move to Germany, saying the German population is growing and growing and growing on an all-time high, 83, 84 million, something like this. Not even factored in all the people coming from Ukraine this year.
No, we have so many people from the south right now coming. And yeah, not even Ukraine, like a lot of expats as well. Like even India has an agreement with Germany
India.
right now, so we're having so many people coming to Germany.
Right. Yeah, right. Also got easier for people
Yeah.
outside to come, like
Yeah.
the German green card is what
Exactly.
they call.
Yeah,
Yeah,
yeah.
yeah, exactly.
They have more workers coming in right now, so it's going to be much easier.
Yeah. Which is basically what we need, because this was always the argument that the German population is keeping getting older and older, like Japan, and declining. So in that case, okay, declining demand. But since population is growing and growing and growing, the demand is there, and if the population grows, as in the chart here, this one, and in the second chart, we're not building enough, because this is basically how many properties we constructed each year. And the government says we need 400K.
No, more now. We
More
need
now.
700.
In total or per year?
Well, now this year they said they're gonna need 700K.
700, okay.
700.
Because of the backlog.
Exactly,
Yeah.
exactly. Because how much they actually constructed? 300?
Yeah, so
I think it
yeah.
was 300. That was like
Almost,
the
yeah.
top.
Yeah.
But last year they needed over 400. This year they're gonna need 700. So it's
We're not gonna finish half.
we're not gonna have any space anymore over here. It's gonna be crazy.
And so that's a very easy calculation, right? You have more and more people, and
Yeah.
we are just not building enough.
Exactly.
As you can see, like with the red line that we have in the middle chart, this is like the average of the last 20 years. It's like roughly 250K, right? So if we need 400 or 700 or however much it is, it's certainly more than 250 that we need.
Yeah.
And since this chart reaches back 20 years, if we're just missing 100K, 100K times 20 years is 2 million. That's basically missing. And that's of course why here in the bottom, property prices increased by 14.2% 2021 and 10% in 2020, and this from the Postbank Atlas. Of course, prices are going to increase
Yeah.
if I don't build enough. So you can say all you want basically, but I'm a big fan of simple market economics that have been proven right hundreds and hundreds of years. And for me, it's a simple supply and demand issue. There's no other way to put it.
I mean, everything about statistics, about here what you're having there. So really, everyone knows that problem, but is still not really doing anything, and not even the demand on people coming in, like or the demand on buying. It's just the demand on renting. Right? Demand on renting is increasing right now. Like last year, we had like how much was it? Like 42% more. This year is going to be even more. So the rent's going to kind of skyrocket. And then someone tells me, a real estate investment doesn't make sense. So we're going to be actually it's a win-win situation, guys, right? So it's we will profit, the buyers profit from that, and that's the whole point out of it. No.
That's basically the only solution, to invest.
Yeah, for sure.
To invest, because the government is not gonna.
No.
Where's the money gonna come from to construct 700,000? Where's the people coming from? Building the 700,000. Where's the space? What you mentioned, and where's the money coming from? This costs billions of euros.
Absolutely.
Can only come from private sources.
Yeah. And also the new constructions, as we mentioned in our video, I mean, more than 30% right now is stopped. So people are not, I mean, it's getting better, but still, the constructions are empty. They're still there. Nothing has been done, or they postpone to finish to build the construction. So it's kind of, residential. That's, well, we're going to talk about that later. So,
So are properties, to conclude, are properties expensive? Yes, but expensive I think we have to put it in perspective.
Yeah.
Salaries have increased, and if salaries increase 100% every year, and property prices increase by 10% per year, then property is getting more affordable, right?
Absolutely.
And that's, I feel, the second mistake, that people go too nominally. They just look at the nominal price increases, but they don't put it into perspective. And if you put it into perspective with salaries, or how the stock market increased, and that interest rates have been pretty favorable, which we're going to come to later on, then it's just normal that prices increase so much.
Absolutely. Well, I mean, we're going to talk about prices later as well. And and talk about how great actually the market is right now. What opportunities do you have? But yeah, obviously, with that being said, the value of the properties are gonna increase. Always gonna
Long term,
increase.
yes. Yeah.
Long term. And you know what? I got the question often, Vanessa, what happens if the prices are not increasing? I'm buying it right now. I want to sell it after 10 years tax free. But then I say, you just don't sell it in that time.
Yeah.
You don't sell it in that time. You sell it at a time where they're going to increase. And this is where you make the most profit, right? So,
Like if someone would have wanted to sell the stocks in
Exactly.
March 2020, right in the Corona dip, then it's just right now a really bad time.
yeah.
Then you have to wait it out, yeah.
yeah, exactly. Or no.
Yeah.
So yeah, you have to just wait for a good time to sell. That's for sure. A good time to buy and good time to sell.
Yeah, correct. Okay, then Vanessa brought a question too.
I do it.
About very special report.
Can you just
Make it a little bit
yeah,
bigger?
That would be great for me.
I can also put it on
Oh, there you go.
on your screen. Is that better?
Yeah, I have our own screen over here. That's amazing. Well, it's about topic bank, right? So what I want to just it's more analyze. So it's more a report also from the Deutsche Bank, as every one of you guys knows, right? So there are a couple of analyses been done from this bank, and I really like it. So I picked up a couple of information for you just to go through over that. But with that being said, in general, the real estate market in German regions, it's just, we said that already. I mean, it's just a high demand over there, right? Just a high demand. So last year, the bank was like, oh, you have to bring such amount of money, you have to do that, you have to do that. There is no way to do another financial option. But because we're having that high interest rates, the bank is also thinking about how can we help these investors, right? On the other hand, obviously they want to make some money too, right? But on the other side, they really try to, I don't know, even if you go with a little bit more down payment or pay the additional costs. But what I want to just tell you, I mean, we're going to talk about interest rate, right? Okay. I'm not going to tell too much, but just to tell you that the real estate market is really, really in a high demand, and the banks, they know that, right? And yeah, there is not so much on offers. I mean, there are offers, right? But now we have actually, before was like 20 people coming in for a showing. Now you're having the half, right? You're having the half. So I don't want to say too much. We're going to talk about prices, interest rate, and also probably some taxes if we can, right? Or a little bit. But yeah, it's just that you can see there is, you can work out with the banks. Let's say that way. You can work out with them. Don't think, oh, I need a lot of money to invest into real estate. No, it's actually the opposite, right? So we want to make sure that you guys go as less as possible with your money. Obviously, with some money.
Necessary,
right?
yeah.
I mean, you can't go really with 0, but we try our best to don't get as much money from you guys. Or, yeah, we work on behalf of Europe, so.
Five Rocks also said that there's less demand, the property developer.
Yeah.
They also said that there's less demand, less people coming to visit properties. But then if you actually look who's missing, because back in the day with zero interest, there were like 50 people showing up, but there were 30 fun buyers, right? Who were like, oh, let's just have a look and all of this because we can afford everything anyway and everything gets financed. But those were the non-committed people, kind of. They were just diluting the people that really want to buy. And so they're saying still there's people that want to buy. It's just that all these fun buyers are gone, which is actually good that the market is a little bit cleaning itself a little bit.
That's true. And to be honest, even real estate agents, they don't have time for that. They ask you, meanwhile, they ask you, you know what, how does your financial status works, or how does it look like? How much money are you making? How serious are you and how committed are you? That's the whole point. But what I like is that you having that better service from the other person with you, right? So they have more time for you, they can go through everything. And when you have that, then you can talk about other things like negotiation and everything else. But if you're having a higher demand, obviously, not even €1, they want to go down.
So maybe the real estate agents are getting a little bit nicer now.
I know it.
If there's not so many people standing in line.
That's true, yeah.
It's about time.
Yeah, and they will call you back.
Yeah.
You know what? Yeah. We could talk about the price. Yeah, it's true. They call you back. They say, you know what? We could talk about the price. So, yeah, everything is. I would talk about price.
Yeah, you mentioned, which is actually the next. Vanessa is a paid actor here, kind of. Which is actually the next question. The down payment. That you should have a little bit of money. We have these 2 questions that actually are from the community. One guy from Instagram asking about the down payment and Nebenkosten, and I think this is what we need to clarify first. So those are 2 separate things. Nebenkosten is basically the closing costs that you have. Notary, taxes, and like notary, land registry, and maybe an agent if you need one, which some of you think it's mandatory. It's not. It's just that in Berlin, Munich, Frankfurt, probably nothing works without an agent. But it's not mandatory. And that's also why in Berlin they want twice as much as anywhere else. And they take like 7
each side. Yeah. They can charge you whatever they want.
Exactly. Yeah.
Not even agent costs, even rent. It's crazy there.
Yeah. So that's the closing costs, the Nebenkosten, what is here mentioned in this Instagram reply. That's different than the down payment. Yeah. Because if we're saying, where he has this 10%, that you buy a property for 100K, just to have easy numbers, then usually there's 10% in closing costs coming on top. Could be 5.5. Here in Bavaria, it's 5.5, the lowest, the only state left, right? With Saxony increasing last year, it's the only state left with 5.5. In Berlin, it's much more. Could be like 15 if you have an agent.
Yeah, if you have an agent, 5.5 plus 2%. Yeah, it could be up to, So south, no. I don't say only south, but yeah. You pay less taxes, to be honest.
If you're looking for the lowest cost, then sure. Bavaria.
But you can deduct that cost as well.
And that's the Nebenkosten. So you would actually, if you buy a property for 110, for 100, you have to pay 110. The down payment would be different. If, for example, the bank says, it's okay, you want to buy the property for 100K, but the real value is only 90K. Then they're not going to finance 100K if they only come to terms that it's worth only 90. So then you have to make an additional 10% down payment, meaning you would have to pay 20%, the 10% Nebenkosten, the closing costs, and the 10% down payment. So that's different. Now, can you get around the down payment? Because you can get around the Nebenkosten. Everybody has to pay taxes and notary. Can you get around the down payment? Yes, if you have a really good property and if you have a really good financial situation. If not, if your financial situation is not that great and the property is maybe not that great, then some banks still do it, but then the interest rate goes higher and higher and higher. We're also right now financing, during the pandemic it was not possible to finance the closing costs. Now it's kind of possible again, but interest rate goes through the roof. That's basically correct. So it goes up exponentially. So it actually can make sense to make a small down payment if you benefit in terms of interest rate from it. Sometimes you do. Sometimes a small down payment lowers the interest rate, like the property that I bought in Düsseldorf. We have a very small down payment that I made myself, and we got a better interest rate. So then it made sense. Sometimes not. And if it doesn't make your interest rate better, then there's not a real reason to do it, except you're looking for positive cash flow, of course.
Yeah, which doesn't make sense right now, but
exactly. It doesn't make a lot of sense because also from the tax situation, we'll talk about that later too. But what it will definitely do, so even though if it not decreasing your interest rate, it will definitely improve your cash flow.
Yeah. That's for sure. You can also, let's say you're saying you don't have enough down payment, right? I mean, as you said, there are banks, they do it. You have to know a good bank, to be honest, if you want to finance like 110%. But you can also say, I don't have that 10% additional cost, Kaufnebenkosten. You could also do 105%. That's what some banks they do. You just pay the half and put the other half. But again, get better two offers. Get an offer of 110 or 105%, and get another offer 90%, for example, if you want to go with another 10% down payment. So just and then you can see if the interest rate drastically changed or not. So this is what we do also for our clients.
We do this all the time.
Yeah.
When we finance with somebody, we'll always get. We usually try the 100%, and then we see, okay, if we make a little bit of down payment, does it make a difference?
Exactly.
And then I think it's for the, so that's a discussion that we have done with the clients. Without a down payment, you pay 3.8. With down payment, you pay 3.6. Is it worth it? Sometimes homeowners say yes. Investors mostly say no, because it's tax deductible anyway. So you don't really care about 0 point some change.
Number one, and number two, why you want to put so much money from yourself, right?
Yeah.
Use the money. If you're investing, use the leverage effect as long as you can from the bank, and use as less money from yourself. So even if you say it changed 0.2%, put that money somewhere else. So don't you really use it whole. Otherwise, or if you have your money really sitting on the account, like you don't know what to do with that, yes, but otherwise just invest it in multiple places.
Kind of like Alan, huh? Can you buy a property for 25K, or would that be the initial payment? Probably both possible. So of course, if you log into ImmoScout, you can see many properties for 25K if they're not on auction. But that's
25K.
Yeah.
Okay. Garage.
Yeah, or the rundown in the middle of nowhere.
Yeah.
And that's probably the solution for Alan here. Yes, you can buy properties for 25K, but it's probably not what you want to do. If you only have 25K and it's not enough for the down payment and the closing costs, maybe here below Vanesa, you have German real estate. Then you maybe want to invest there and save a little bit more until you have enough for a down payment. But I would strongly advise against buying a property for 25K.
For sure. Yeah.
This is like these. I had a reaction on these €1 homes in Italy. It feels kind of the same way. Okay, you buy one for €1, but then you have to put in 40K more or something. What was the average? And I think that's the same way. If you buy a property for 25K, you have to put in another 50 in order to make it worth easily.
For sure. Don't think that you have to pay the whole amount or go in with more than 50%. Please don't do that. Don't do that. So even if you have it, doesn't make sense at all. As a home owner, like a primary home, the bank will ask you anyways to go in for 20-25%, right? So this is a different story, but for investment home, no.
It's highly dependent on the property too. Yeah, you're right.
Yeah.
We had a person that wanted to buy a multi-family home in Frankfurt for $1 million. That was the asking price, and all banks said it's worth 600 because it was so old and how it was constructed and everything. And then of course you need a 400K down payment, otherwise you can't buy it. And then he went away, so he didn't buy it. Luckily, I think it was a good decision to not buy it.
Yeah, I mean, probably someone else charged way more, right? So
If all banks come to terms and say it's only worth 600K, I wouldn't buy $1 million for it. Yeah. There's probably a reason.
I mean, even if you're buying a property, investment property or a primary home, the bank still needs to approve it. Yeah. Like if they don't say it's worth that money, you cannot proceed, right? So you kind of have to wait for the bank, even if you want to You want to buy like this 1 million property? I mean, it's a huge difference.
Yeah.
Whoa.
That's the largest difference that I've seen. Yeah. Wow. Also in terms of real money and nominal value, and in terms of percentage.
Absolutely.
I haven't seen more.
No, that's crazy.
We have a question from Charlie. I have a question regarding that logic that you are proposing right now. Okay. So if I'm offered with a house that is valued like 550 and I can buy it for 480, does that mean that I'm getting less than 100% of loan if I take. Okay, I understand. So first of all, I would question why, if the property's worth 550, if it's really worth, let's say objectively it's worth 550, why would anybody sell it for 480? That's first of all question number one. But what we mean with the 100% is, in our system, in the mortgage broker system that is connected to the 700 banks, you have to type in exactly what type of property is it, how many square meters, when was it built, how is it constructed, what is the address, and all that type of stuff. And then there's a range how banks value this. And let's just say you buy it for 480, and there will probably be some banks that also value it at 480.
Yeah, exactly.
And if the bank values it at 480, then you have 100%. And then you can also buy without a down payment. If all banks, like with the Frankfurt one, if you want to buy it for 480, but all banks say, because of the address and the age and how it's constructed and when it was renovated and all that type of stuff, if all banks say it's only worth 350, then you can't buy it for, you can finance maximum 350.
Exactly,
basically then.
exactly. So that was what I mentioned. You always have to wait for the last, it's not the last go. The last go is actually the notary who has to prove a couple of things, but you have to really wait what the bank says. Yeah. And if you're having a difference, then there is something wrong with the price. So be careful in that as well.
Yeah, so people always feel that if you made a really good deal, right? That if somebody offers it for 550 and I can buy it for 480, it's a really good deal. Yeah, maybe it is. Maybe it is, but it's a little bit of a red flag for me too.
Yeah. I would agree with you. You really have to look at that. Yeah. And having also a great partner on your side, right? Who knows about all those things. Yeah.
Yeah, for these numbers especially, I would go with a property inspection. So more and more banks want it anyway when you do a mortgage with them, like with this Value AG, right? Is what most of them, they do this anyway, and I think this is a really good idea. I wouldn't buy something for 480 or 550 or whatever it is, and then half a year later you find out somebody painted white over mold or something.
Yeah, absolutely. I would do that. Yeah. There is another question.
Yeah. Can you read it or shall I make it bigger?
Yeah, I can read it.
Okay.
Does it make sense to buy 1950s or 1938 built apartment even if it's renovated? Yes. My opinion is yes. Most buildings were built between the 50s and 60s, right? In Germany, that was pretty quick after the war. So you're going to find lots of 50s and 60s buildings in Germany. And why not? To be honest, I wouldn't say they're a lot better than the newly built, but to be honest, the materials also like the structure body and the build body is sometimes better. Okay, we have in Germany these old buildings like Altbau, which are pretty famous. People like even here in Munich, people like fighting to live in one of these in Munich
high
City.
ceilings and all that.
Yeah, exactly. Like it's beautiful, and I believe also these 50, 60s gonna go in that way one day as well. But you just have to be really sure about this. In what condition is that property, right? So again, as I mentioned in the videos with Axel, check the protocols, check the savings, right? This is very important. It's great that it's renovated. We also have properties in that age and they're renovated because you kind of ahead on because we're having that energy dilemma right now, but you kind of ahead of the renovation, what is going to happen, right? Except the heating system and stuff like that. But yeah, check everything out. And I think if it's renovated, it's great. So in that way, if it's renovated, you can even charge a little bit more on rent.
Yeah, I think that's exactly the point. So building year is, of course, one factor. Yeah. Location is the other factor, which we could make a whole live stream about it. And what was renovated, I think, is the question. And what I learned over the last years is that this goes pretty deep. Yeah. The most extreme example that I know of is where they renovated the windows. So they put in these new 3-time glass windows or whatever into an old building. And then half a year later, the entire property started molding because with these old windows, the building could still breathe, which was necessary.
Yeah.
And with these new windows, it doesn't.
Yeah.
And so mostly the real expensive stuff is roof. That's super expensive. So if the roof is from 1938, pre-war actually,
keep attention or pay attention.
Definitely check the WEG protocols,
Yeah.
the WEG protocols, because in these protocols, the owners is basically the protocols of the owners association, where they come together and then they vote. It's very democratic usually. They vote what shall be done in terms of renovation in the next couple of years, and sometimes they vote, next year we will refurbish the roof, which costs 1.5 million for the entire property. Meaning, and that's what you mentioned with the savings, every single party, every single owner has to pay 25k, for example.
Exactly.
Then the year afterwards, we do the underground parking, which costs another million. So every owner has to put in another 20.
Yeah.
And usually they plan this for at least 3 years, or that's kind of the average, I think. And then you can see in these owner protocols that, oh, maybe I'll buy this property now, but in the next 3 years, I have to pay 55k in renovation.
Yeah.
And then, of course, that's a good reason for you to renegotiate the price, like Charlie maybe did, right? When he got a 70k discount. So definitely check this and see exactly what was renovated, because roof, heating system, especially now, heating system, underground parking, facade, those are usually the extreme... balconies are also. Yeah. So don't focus on white walls. Nobody cares about if the walls are white or not. But those are the real expensive things.
Yeah, and this is what you mentioned. If it's renovated, also make sure what type of renovation. I always talk about 2 types of renovation. One is the simple one, painting walls, doing a quick new floor. Okay, so these are quite simple ones. But the deeper ones are really kind of putting out walls, checking the cables behind, what has been done on the washroom, bathroom, right? These are kind of all factors you really have to keep attention and pay attention, because otherwise you're going to end up paying way more, that's for sure. But yeah, I mean, to your question, Sharma, I think 50s, 60s, even 38s, I mean, they're great. It depends on the property, because you don't want to end up paying way more than you paid. And yeah, I think that's important. Have appraisal in this case as well.
Yeah.
Have an appraisal there.
Definitely.
Or if it comes from a company, just ask about the appraisal report.
Nobody's annoying here. We have a small little circle here. All good. We have a couple of questions prepared, but if we're just chatting today, it's also good.
Yeah, that's good.
Hello, Brian. I recognize your name from... I'm not going to say anything. I'll just recognize your name. Welcome back. Hello, both. If I'm not wrong, you advised in your latest video to get the smaller down payment possible. Yes. However, if the property price is above 800k, is it worth to have a mortgage for 35 years? Yeah, so independent of the mortgage amount, the length of the mortgage is usually determined by the interest rate.
Yep.
Because you pay, your mortgage is actually, that's what some of you seem to forget, is principal and interest. And in the beginning, in the standard mortgage, let's say, right? If you have a special mortgage, then it looks different. But if you just walk into a bank and say, I want a mortgage, this is what they'll get you. One where you pay a lot of interest in the beginning and very little principal. And then over time, your interest goes down and down and down exponentially. And your principal goes up and up and up. So for you guys like this, because it's all, it's mirrored.
Yes, sure. It changes, it flips kind of, right? So.
It sounds a little counterintuitive, but it's actually true. And we have a calculator on the website too. If we don't forget it, we link it. The higher the interest rate, the faster you paid off your mortgage.
Yeah.
So in these times when we were financing for 0 point some %, the mortgages were a little longer. Nowadays, when the interest rate is a little higher, it's not skyrocket, which we'll have later on, but nowadays that the mortgage is a little, or the interest is a little higher, the mortgage is shorter, right? So independent of the amount, but usually the mortgage is between 25 and 30 years with the current interest rate.
Yeah, and it depends also on the age, right? It depends on the age as well, but the goal is here really to use the maximum.
Yeah, meaning 2% principal.
Yeah.
If it's allowed. If the bank wants 2.5 or 3, okay, then you have to do it. But with the standard one where you pay 2% principal per year, it's usually between 25 and 30 years.
Yeah, that's exactly true, yeah.
Now, let's see, if the property price is above 800K, doesn't change anything for me.
No.
I would just leverage, but it's also a risk question, right? Of course, the more leverage you have, the more risk you have. But if it's allowed, and it's still allowed, I would leverage as much as I can. I would put 0 down if I could, only pay the additional purchasing costs. Put 0 down and get an 800K mortgage from the bank.
Absolutely. And Brian, I don't know what the strategy is from your purchase. If 800K, I don't know if it's for you or if it's an investment or if you want to do a VG concept. Like, it also depends what yield you get, what ROI you get at the end of the year. But we in Munich, we also have, 800K properties. But you have to be smart here. Really, you have to get a smart strategy. You have to, usually we do a VG concept here in Munich. So that means you have 3 to 4 or 5 people in one property living. And then you're generating better cash flow. So that means you're having higher rent. And you're going to be pretty quick into cash flow positive. So it depends on the strategy as well.
Exactly. Yeah, if you're looking for positive cash flow, then a down payment can make sense or is even necessary.
Yeah.
And then I think you would need to do the analysis and see, okay, if I put in 10K more, which is actually not that much for an 800K property, but how much does it mean in terms of monthly cash flow?
Yeah.
And then you come pretty quick to, okay, where's like my limit for opportunity cost? Because if you put in 200K, then of course you will be cash flow positive with a couple of €100, but then it costed you 200 in the beginning. So maybe instead of putting 200 down, let's just say you have it for the sake of the argument, instead of putting 200K, which you could invest somewhere else in ETFs or wherever, then I'd rather have a small negative cash flow instead of putting in a large sum of money in the beginning. But that's me.
Yeah, it's true. It depends on the strategy, but that's what I said right now, if you're having a higher income, right? What means higher? Even high income, it makes sense to save some taxes. And in that way you save it, you have to pay additional money on top of it. Yeah. And then use that time, right? And later on, you're going to be a cash flow positive. So then you enjoy. But putting 200K into a down payment, I wouldn't put that either.
Yeah. Which was just an example from me, right? Yeah. So it was just an example.
I wouldn't put that either. I prefer to put multiple investments. And then after 10 years, guys, you can sell it tax-free. Yeah. You don't know. You're going to put on, for example, now if we stick with the 200K, just as an example, you're going to put 200K right now, sell it after 10 years. You're going to be like, man, why I didn't buy anything else with that 200K? Yeah. And you made such a huge profit and But yeah.
You always have to say, when you mention specific numbers, you always have to say with these guys that it's an example, because later on in the comment section they will eat you alive for, oh, you said 200K and...
I'm sorry, but I think everyone knows what
they're double check everything. So
okay. If you need a specific consultation, you can, we can jump into a call.
All here, yeah.
It's individually, right? So it's a really individual case now. Charlie, what do you think about buying properties that were built before 1900s? Let's say if everything is both modernized and renovated, even electric pipes, sewage, roof, walls, etc. Again, the good part on the properties which were built before 1924, you're having a higher depreciation. So you're having a 3% amortization instead of like after 1925. So then you have a 2%.
Which you'll also get for the new ones.
3%, the new one.
Yeah. And for 24, was it?
No, that's with the AFA, with the Förderung. Then you get another tax benefit. Yeah. I mean, it's an individual question. To be honest, again, check everything. Usually, these types of properties are Denkmäler, so they are really protected properties. Okay. I don't know if it's a kind of a property where you save some taxes. There's also another strategy. You kind of have to pitch in with more money at the beginning, but having a lot tax advantages, right, within the next years. But again, I believe these properties are pretty famous. It depends on what area. If we're talking here about Munich, yes, but again, check really everything, because we're gonna talk later also about the energy things and see what type of heater is there, if it's gonna be renewed. So this kind of things really, really matter. Check the protocols for sure. Yeah. But you even right, even renovated, even electric pipes. Yeah, that's I believe it's like kind of a Denkmal. And a Denkmal, just to add that, is that if anything occurs on that property, the government or the city is pretty behind that. So they really do it right away. So they don't wait for such a long time. They do it right away. They do everything. And see also about the ROI on these properties and the area, I would say.
So I'm just making light. I don't want to be disrespectful.
What light? Okay. Okay, I'm gonna do the second one.
Yeah.
Yeah, or the next one. Roshini, does buying... Okay, Sharma, thank you so much for your comment. Really appreciate it. Roshini, does buying an investment property in Munich in the current market make sense? I currently see that the return rent is lower than interest rate in most cases. You have to look at the whole concept. I mean, buying a property in Munich, I would say it's pretty safe, to be honest. But yeah, there are different prices than when we talk about Augsburg, Ingolstadt. Okay, there are different prices. But I always say, a vacancy in Munich, you're not gonna really see that. The demand is super high, as you know. The rents are also super high, so I wouldn't really worry about the rent is low, because it depends what property you have. If you're having, let me go a little bit here in the camera. It depends what property you have. If you're having a property which is older, not renovated, and probably you're not gonna furnish it, then you're gonna have less rent expected. But if you say, hey, I'm gonna probably renovate my property, or I'm buying it renovated and furnished, which is called a Sondervermietungskonzept, then you can charge more in rent, and then it's a better return for you, right? So you really have to look at both things, and it also depends on the price, as the prices are higher here. But it's a safe place to buy, and there are still good deals in Munich. You have to look for it. But if you go for such a concept, if you go for such a Sondervermietungskonzept, what I talked about, then it makes sense in bigger cities like Munich. Because in most cases, I don't know how big that property is, but let's say it's a 1 or 2 room, it makes sense. Because the big companies, for example, BMW, Siemens, and all,
Allianz,
they have all these workers, right? They look for them for a property, or they're also in contact with the property managers. So in most cases, the companies are also paying the rent.
Sometimes, yeah.
Yeah, but
that would be pretty good if you have a rental contract with BMW.
yeah, I can give you an example. I had a property. It was pretty close to the center. 1 room, it was 28 square meter, and the tenant paid 1,000 euros cold. So it's possible, and that's I wouldn't say it's a higher rent, right? It's not that normal, but for that location, for that condition, what was renovated and furnished, absolutely you can get that.
Yeah. Yeah, it depends a little bit again what your strategy is, because again, Munich is only location, so then we have still age and all of it, what you can do out of it.
Yeah.
Like you mentioned, of course, biggest university in Germany, right? So Sondervermietung, WG concept with multiple students makes sense if they don't ruin your apartment and make parties all night long. I think the big argument for Munich is that it's super safe. Like there's no alternative. If you look around, like 100 kilometers, there's Augsburg, which is like as expensive as Munich almost. So there's nothing really, right? That's completely different in the Ruhrgebiet, for example, where you have many different towns. Munich is just, there's no alternative here in the south, really. So that speaks for Munich. Of course, you have to pay the price for it, right? Because that's what everybody knows. Not only we're telling no secret here that there's nothing in 100 kilometers around Munich.
Yeah.
My strategy is more B and C, because I feel Munich is, now they're gonna come at me with the crash thing, but I'll just say it. I feel Munich is too expensive for what you're getting. And I live in Munich, so I know what I'm talking about. I wouldn't buy in Munich. I'm not gonna buy a home. We talked about this the last time. I feel it's too expensive. I would rather buy 2 small properties worth 200, 250K in a B, C location. I mean, you guys know it, right? I bought in Düsseldorf. Now with German real estate, we have a lot of properties in Leipzig, which is an exciting location. I'd rather buy 2 small ones in a B or C location than 1 big one in an A location. But that's my personal, because I like diversification.
Yeah, that's true. It depends on your strategy, guys. So if you go for a property in Munich, for example, don't go, like investment property, we're talking, don't go bigger than, if you want to start small, don't go bigger than 2 rooms or 1 room, because more and more people or young professionals, they move to Munich, okay? So after Corona, people want to come back, they want to socialize, they want to go out, and this is what they find downtown or like in Munich. But also the other concept, what I talked about the WG concept, putting more tenants in there and having a better ROI. It depends, yeah.
And you can afford more than 2 rooms here anyway.
Yeah, yeah, that's for sure.
Zefi, I think we can congratulate you, huh? Hello, just yesterday I was by the Nota for an apartment. I have 2 different loans. 160K for 36 years with 4% interest. How does that work? 36 years, that's quite long.
Wow, you started pretty young. Great.
Do you have 2%, 2% principal? Because that's pretty long. With a 4% interest, you probably have only 1.5, which would be really cool if you got this. And 40K for 20 years for 7%. 7% interest. It's probably a personal loan, huh?
Or 7% in total? Right, interest and principal?
Is it worth to pay back the 40K ASAP? So what it sounds like to me is that you got a 160K loan, a mortgage loan, and 40K personal loan is my feeling. And then basically everything that we just said flips for you. Yeah, 7%, even if you can deduct it. That would be actually an interesting question. If you can deduct a personal loan, if you can tell Finanzamt that I had it for a property, that would be an interesting question for a tax advisor. But even if you can deduct it, it's like a healthy 3.5 that you have to pay net. Yeah, 7% is a little too much, I feel, to talk about leverage.
Yeah, for sure.
Makes a lot of sense. I will check the calculator. And for the question, it's a home property in Frankfurt. Okay. I will not comment anything on your proposed numbers. Thank you very much. Otherwise, I'll always get into trouble because then I have to see what numbers did I say. And I'm planning to... Okay, yeah, so if you want to, which is, Sefi, what you're mentioning, that you want to buy more real estate in the future, that's kind of another question that we have prepared for later on, if we can make it. The real power, basically, from buying one property, and that's also why we're saying, the first property you want to buy, if your strategy is to buy multiple anyways, it doesn't have to be the 100% perfect property,
Yeah,
which
exactly.
doesn't exist anyway, because if the property itself would be 100%, then it would be so expensive that it's not 100% anymore. Then you actually did it perfectly by get the first deal done, period. Get the first deal done, because then what's happening now that your 200K property over the long term will continue to increase in value, and your loan will continue to go down, right? So you start at loan, property, you start both at 200, property goes up, loan continues to go down. And this discrepancy here basically is what we call free equity, which you can use later on, and then you can buy properties without down payment, without closing costs, because you can finance anything anyway, because you're so secure with the other properties. So congrats on securing the first deal, and I hope you can make it.
Congratulations. You know, I think the banks, the more properties you have, or even your first property, they will open their arms and say, okay, how much equity did you build in this months or years? They're going to give you a better budget for your primary home. And this is what usually also people come to us and say, oh, I'm not sure, should I go for a primary home? Should I go for investment home? So yes, it makes more sense. Go first for your investment home. This will help you to achieve a better budget for your primary home one day, because you don't know when you're going to move in. Because we have people coming saying, maybe in 1 year, maybe in 2 years. You don't know that. So you don't know yet, but you know you have the money sitting on the account. Just invest it into a smaller property. This will help you to get a better budget. And even the equity, they will kind of put it on top of your budget for your primary home. So it's just the first step, guys. It's just the first step.
Always
It's the hardest one. It's the hardest. The first step is the hardest. But if you get that, you will be kind of in a process looking for a second one. So it's just the first step. Yeah.
Small step for humanity, but a big step for Sefi.
Yeah. Amazing, Sefi. Congrats again. Misa, hi. Did I jump? No, that's the next one, right?
Yeah.
Hi, is it really beneficial to buy property for investment instead of investing in ETF stocks, considering ETFs will return at least 5%, whereas property typically return? That's you.
Yeah, I think we also, do we have something about this later? Yeah, basically we had somebody with a question yeah, I think we'll do this later.
Yeah.
We'll do this later, because we have, and in case that you have to leave Bisa and you're like, oh, they're gonna answer this later, will all be, the live stream will be on YouTube, the video. So then you can check it out later on. But we have a couple of people kind of with the same question.
Yeah.
Maybe do we?
Don't say that. People are gonna.
Yeah. Now everyone's leaving.
Okay, they're gonna.
Okay,
record.
see ya. You want to continue with these questions, or what you had?
Go ahead. We can combine that, right? So if the.
Okay, let's do one of the prepared ones, which is your interest rates question. Because some people had also questions that we asked before on social media, and of course we also want to get their questions in.
Yeah.
So.
Can you make it just a little bit?
Yes, I'll show it on the Vanesa screen.
Okay. Again, we had the questions, and here are actually the report from the bank very recently. But it says here as well that it's always a question: are the interest rate gonna increase? Are they gonna go down? You know what? We don't have that glass bubble, or how I call it always. Like, we don't have that to really see what's going to happen. But as they mentioned, is they might go up. Okay, so they might go up. They assume they will go up by end of this year, right? And as we had that the interest rate shock in December 2021, it might happen again. Okay. So this is it's kind of a statistics, because in the 70s we had the similar time, which was like worse. They believe it's not going to be that bad, but at the other hand, they assume it's going to go up, okay? And it might come really, I believe it's going to be probably up to 6%.
They meaning Deutsche Bank, right?
Yeah.
Okay.
Yeah. Yeah.
I'll show them the long-term interest rate chart.
Yeah.
You can just continue.
I mean, the good part right now, what we have, even if you're paying a high interest rate, which is right now like between, it depends on the down payment.
Yeah,
and
so the best
everything.
one was 3.6 this afternoon.
Really?
Yeah, which nobody really. It's the marketing interest rate.
Wow. Okay. I had recently a good one. It was 4 point. Yeah, it was almost straight 4.0.
Yeah, I think that's also the realistic one, because the one that is always published online is the marketing one.
Yeah, exactly. That's the one you see, 3.5%.
Yeah.
And then you click on it, and then you submit everything, and at the end you get a 4.5%.
Exactly.
So, but what I want to say is, if you get a good deal, save that interest rate, because as even the Deutsche Bank presumes that it might go up, at least you can save it right now, right, in that market. Because some clients, they come up to me and say, Vanessa, can we do 5 years instead of 10 years? But even if you do 5 years, the interest rate is going to be way higher. And you don't do it for a strategy what is usual buy and hold, which means you're buying a property, you hold it at least for 10 years and you sell it. So I would prefer save it for 10 years and then you can still decide what you want to do, right? So we don't know where this is going to go. People assume it's going to go high again. And this is what I always say. Even this week, we had an increase. And we can really see a 0.3, 0.4 difference, to be honest. So before it was more, it was funny. Before it was more, oh, save the property, get the property kind of reserved, right, from the agent or so, and take your time with the with the financial part. But right now it's a different way. You have to be so quick. I mean, you even have to be quick in if you're having a great deal, but you have to be more quick in saving the interest rate, right? Because every day is kind of going up and a little bit down, but it's mostly going up.
Yeah, so, and right now the premium, I mean, we have an interest rate calculator on our website too, right, which shows the marketing interest rate, so be careful. It's maybe a little bit better than what you'll get at the end, but the premium right now between saving it for 10 years fixed interest and 15 years fixed interest is not that much most of the time. Of course, it changes daily, but most of the time it's not that different. And then you can also save it for or have a fixed interest rate for 15 years. And even if the interest rate is better in 10 years, according to German law, you always have the right to eliminate your entire mortgage contract after 10 years.
Yeah.
So if the premium between 10 years, 15 years, 20 years is very little, it might make sense, what Vanessa said, that interest rates could increase to fix it for as long as you can, basically.
Yeah.
Because if it's better, you just cancel your mortgage contract and get a new one at a better interest rate.
Yeah, exactly. And at the end, it's tax deductible. That's a great part. That's what most people don't know. If you're getting just for investment properties.
Yeah, just for investment.
Not primary homes. You can deduct, depends on your Steuerlast, your tax level, right? So it depends, and you pay a little bit more than the half, and you can still. So let's say you have a 4.0, and at the end you pay probably 2.3 or so. Yeah.
And that also answers the question we got on Instagram. Still worth it with skyrocketed interest rates? We brought you the long-term chart. Where's the skyrocket? Of course, this is an old chart, right? So right now we're at 3.6, but still the chart, the point of the chart is to show you the long-term trend. And of course, it has been, it would have been a lot better to buy 2 years ago, but that's just not the reality right now. And I can see a skyrocket. A skyrocket would be 8%, 9%, what we have here in the long-term chart. But not 3, 4% is normal.
Yeah.
Normal, but not skyrocket.
And keep in mind, there are countries, they have even more interest rates than we here in Germany. Like if we talk to our clients, they're like between 9 and 13% sometimes. So it's still pretty good. I mean.
And inflation is, in 2020 we had 0 point something interest rate, but 2% inflation. and now we have 4% interest rate, but 8% inflation. So you're actually, and we talked about this in the last one, inflation is pretty good for real estate investors, even though everyone hates it, myself included. But for real estate investors, it's the best thing that can happen.
Yeah.
And if your premium between your mortgage rate and the inflation rate is 4%, it's actually much better than it was 2 years ago with only 2%.
Exactly. Absolutely. That's for sure.
All right, then.
We're gonna do that first, right?
Yeah.
Okay.
Vanessa talks about real estate prices.
Favorite topic right now for a lot of people. Yes. I mean, we talked about the prices they're gonna increase, obviously.
Long term.
Long term. Inflation and everything. But you know what? It's just a great time right now. You can negotiate right now. It's a great time. I don't want to say the prices dropped so much, no, but you can still go into a negotiation. It's a great time to talk to the seller, talk to the agent, and negotiate the prices. You can try. More than a no, you cannot get it. So this is what I experience right now. There are great deals out there. And you can really negotiate with people, even if you save for a couple of thousand, but at least you saved, right? So this is what we said. You're paying a higher interest rate, but that is like here, okay.
It's not that easy, huh?
You have to.
So this is in real time, and this is a little bit delayed.
Okay. Anyways, so that's what we talked, guys. You're paying a higher interest rate right now, which you can deduct on taxes. But the great part here right now, you can negotiate. This is a great time. You can go down with the price. 3 years ago, we had that low interest rate, but we had that kind of higher prices, right? So people didn't want to negotiate. They said, you want to buy it or not? And that's it, because you had these lower interest rates. And right now, it's just the opposite. You can tax this interest rate and still get a good deal. That's for sure. And even that's what we mentioned. It's not everything about cash flow. Cash flow is not king, especially now in this time. Use the benefits, use the tax benefits. As soon as you're in a cash flow positive, you have to pay taxes as well, right? So use that time, downsize your tax payments, and pay a little bit in addition. It's okay. It's absolutely fine. That's how you build equity. And people realizing that. Before it was more cash flow from the beginning, great. But right now it's fine. It's absolutely fine, because you can go down with the price.
I mean, 5, 6, 7 years ago, everybody bought with positive cash flow, but not COVID, post-COVID times.
No, and you can barely find that. If you can find that, I'd really like to see where.
Yeah.
I'd really like to see where. Because if you find from the beginning a cash flow positive property, depends on the location. This is what we always talk. Location. Very, very important.
And I'd rather have a better location and a negative cash flow than a positive cash flow and a shitty location.
Absolutely. You have to really, if you go for a property, you have to check the statistics, micro. Like, you have to really check what is close by, what's the history behind that area, behind that city, in which province it is. So you really have to pay attention. If it's somewhere in the, I don't know, nowhere, and you're having a positive cash flow, yeah, it's great, but where's your property gonna go? What value is your property is gonna have?
And you will only have a positive cash flow if you have a tenant, which if your property is in the back end of nowhere, good luck finding a tenant. Yeah. Because if you don't have a tenant, you have a pretty negative cash flow suddenly.
And you cannot even increase the rent, to be honest. Like, even if you increase, no one is gonna live there. And also be careful about positive cash flow. Sometimes you have properties there for a really, really good price, okay? It might be in a good area. It might be super cheap, but check the protocols. Why the sellers are selling their properties so cheap? There might be something behind.
Yeah.
So I always say you pay for quality. people value, and you pay for quality, you pay for location, really. Yeah. Yeah, just to wrap it up about the prices. Great time. Great time right now. I don't believe this time is gonna be for long.
Yeah.
Yeah, I feel like it's kind of stabilizing, right? Because the demand is higher, but still you can negotiate. Yeah.
Value question is the next one that I have, like the value and cash flow, but let's maybe, and this will also lead into Misam's question. But let's see what we got maybe before that. AA, I'm planning, anonyme Alkoholiker. I'm planning to buy a house or apartment in B area in NRW, so North Rhine-Westphalia, with 3.5 rooms with 350K. And it should be a new building or almost new, recently built. Are you planning to? Okay. Is it possible or am I dreaming? This would be for my own use, not... Yeah, I mean, check ImmoScout, the big web, probably, yeah. I mean...
It depends where in NRW, but if
Yeah.
you talk about Düsseldorf, Köln, for 3.5
No.
rooms, no, that's probably somewhere around.
Yeah.
3.5 rooms, newly built, yeah. Eigenkapital almost 100K. Yeah.
Which is good, but I wouldn't put it everything into the property, but having it is good.
Yeah.
Having it is good.
It's good. I mean, every one of us has the dream to have their own property, right?
Yeah, this is what you said the last time, and I said,
Come on. Yeah, but some
Many
of us
people.
Okay, many people. I mean, the other part is if you're having your own house, let's say you have a house, everything is perfect, and you're kind of tired, you want to move out, then what do you have to do? You have to sell it, you have to It's also beneficial for renting. You rent it, you can move, right? But yeah, a lot of people have that vision to buy their own property.
Yeah. Many people do, that's true.
But yeah, amazing. If it's good, if it's a newly built AA, so yeah, why not? But as Axel mentioned, that's even more, 350, yeah, it's a little bit less than 50%. Yeah, try to take a little bit more out of that and probably invest as well. So,
I mean, 100K invested would have a pretty nice return, yeah. A lot more than if you put it into your house. And keep in mind that if it's a house, it's not about mortgaging the property. Because if you move into this house or apartment, there's furniture, you maybe need to renovate some stuff or paint some walls or whatever, you need to make the garden or something. So don't put everything into the house and then you have to sleep on the floor. Because furniture is also not cheap these days.
Even if you go to IKEA, still not cheap. Yeah.
Aren't interest rates question from Giacomo. 3 questions actually. Let's see if they're connected. Aren't interest rates too crazy right now? I would rather pay more in principal than interest. What scares me in getting into real estate is that I wouldn't be able to distinguish a good deal from a bad one. I would not know if I'm getting scammed. Why are real estates cheaper? Rented real estate's cheaper than free ones, and do you get okay? So 4 different.
Four different questions.
So we talked about interest rates already, but again, strategy question, right? If you feel so, interest rates are not crazy. Point 1, and point 2, strategy question. Myself, I'm more the kind of guy, I want tax benefits and I want to buy as many properties as I can. That's why I leverage as much as I can. And when you want to follow the same strategy and leverage as much as you can, then pay as little principal as possible. If the bank wouldn't allow it, I would do 0 principal or 0.5 as they allowed it pre-COVID. I would do this in a heartbeat. If you are a cash flow positive guy, meaning you have to put in more money, you can buy less properties, and you leverage less, which is also more secure than in that case. If you're more a safety guy, then you can do more in principle.
Yeah, I always have I visualize always if I go with more money right now, and if I really sell that property after 10 years tax free, I will think back and say, man, why did I pitch in so much money, right? We don't know what is gonna happen in future, and I know probably some of you guys think, oh, when I lose my job, oh, when I do, I cannot pay. There is still a way with the bank. Even if you lose your job, you can kind of pause the principal rate. So if we think always in these worst scenarios, we're not gonna really start with anything. But regarding pitching with, this is how I think, right? So better go with less and have multiple investments, and these multiple investments will increase in value, right? So,
exactly. Yeah.
But yeah, as Axel mentioned, if you want to have faster cash flow positive, then you have to pitch in with more. Yeah. Actually, I had that recently with a client. It was a similar question, and we were kind of calculating and things. And it's also about the emotional thing, right? So this is really how you think emotional. What do you really want to have? Sometimes to make a decision is so hard, right? So you have to think about the future, right? We are in a time right now, the more you invest, the better return you have. It's not anymore putting money under the pillow, under the mattress, and just not doing nothing. Yeah.
You want to do one more, and then I'll continue,
Yeah.
because this distinguishing a good deal from a bad deal, that's your area.
Sorry, where we were.
Here.
Okay, thank you. What scares me in getting into real estate that I wouldn't be able to distinguish a good deal from a bad one. I would not if I'm getting. I always say having a person who you're trusting is very important. Okay, I mean, we're gonna be clear here. Everyone wants to kind of sell you, and we kind of in this field, especially in real estate. To be honest, you really have to look at that, but look at the numbers online. Actually, like the homeday.de, they really show good reports and good results. And even if, let's say, they sell you something more, the bank will stop, right? So the bank will say the value of this property is not even that much worth it. So this is where you have kind of the first stop in there. Yeah.
I gotta be very honest. I have no skills in distinguishing a good deal from a bad deal, because if I know that, and you all heard Wirecard, FTX, right, all these, if they are able to scam BaFin and KPMG and E&Y, then I'm sure that and I know a lot about real estate from the numbers and the taxes and all of it and how this works, but I'm not an architect, and I'm not a technician, and I'm not a building engineer. So I know, but maybe that's me. I know my limits, and if somebody wants to scam me by selling me a shitty property for a high price, then I know an expert could do it.
Yeah.
Who knows more about the property than I do. That's why, that's what we said earlier. Have an expert from TÜV or whatever, Value AG, some banks demand it even, which, saying again, I think it's good. And then they can help you select a good deal from a bad one, because they know. They know. And it goes far more than just pretty pictures.
Yeah, exactly.
And I think a pretty good rule of thumb that we probably can all agree on, if it's too good to be true, it probably is.
Yeah, that's true.
That's the biggest alert probably for a scam.
Yeah, you're right.
Okay, Misam waited long enough. I think let's talk about those two, which is basically what we touched on a little bit already, the positive cash flow one that we got earlier, and also the question, how do you basically get value from the property if you have a negative cash flow, right? And this leads me actually to what Misam was writing right here in chat. Is it really beneficial to buy property for investment instead of investing in ETFs or stocks, considering ETFs will return at least 5%, whereas in property 2 to 3% with tenant issue. So tenant issue, he's actually right about. So property is definitely more work. That's certainly true.
Yeah, there are, but if you're having the right partners, like if you
Yeah,
have
okay, yeah.
okay, yeah, but
yeah. So the perfect scenario, of course, what all three of you mentioned, basically, right? The two comments here and me some too. The perfect scenario would be, and I think we can all agree on this too. You invest absolutely nothing, €0, and you get instant passive income, right? Because then everybody knows, okay, this is where value is created, right? I invest 0 and out of nothing, I get money on my bank account from the tenant, because the tenant pays me more than mortgage and insurance and whatnot, because you have to pay a lot more than just the mortgage. But that's not the reality. That's selling you a dream. Who AA had a dream. That's basically a dream, right? The reality is you have an upfront investment. We talked about it. Down payment maybe, but certainly closing costs, and you will have a pre-tax negative cash flow. After tax, it may be different depending on your tax rate, but at least pre-tax, and that's what many of you guys are always talking about or have in mind, that you get more rent than you have to pay the mortgage. That's what most people, I think, would consider with positive cash flow, and that's most certainly gonna be negative. 4% interest, we talked about it, or 3.5%, it doesn't really matter, and 2% principal is 6%. Meaning, if we're just looking at how much does the tenant pay and how much do you have to pay for the mortgage, then we need a return on rent of at least 6%, which is pretty high. So it definitely doesn't exist here in Munich. So now coming to ETFs. Is ETFs then the better option? So if your ETF returns 5%, that's of course different if your ETF grows in value by 5% and the property returns 2 to 3% in return of rent, right? Then we're comparing apples with oranges here. What we would need to compare is the dividend yield of your ETF, because that's what the ETF returns regularly. At least that's the closest, because if an ETF is worth €100 and pays €1 in dividend, the ETF value mostly goes down, right? Or the stock value goes down. After tax dividend date, Ex-Dividenden-Tag in German. The ETF growth of 5% is what you mean, is the property price growth. So then we're comparing apples with apples here. And I think 2-3% is also what an ETF would pay. But still, the comparison stays, right? And then you're saying ETF returns something, so positive cash flow, property negative cash flow. So I'd rather do ETFs or stocks. That's what some people say. And I haven't thought this completely through. I'm actually planning a video on this. Maybe you can tell me if my thinking is wrong. I feel a little bit uncomfortable saying this because I haven't thought it through in detail, but I think my logic adds up. If you invest in an ETF, €100 a month or something, with a 2% return on rent, dividend yield, because the ETF value can go up and down, right, like a property value. So we would be looking at, in terms of cash flow, what you want, positive cash flow, it's only the dividend yield. But if you invest €100 a month, or 500 or 1,000, it doesn't matter, and you get 2% in dividends, then it's also negative cash flow. Because you invested 100 and you get €2 per month, and you get €2 per year if it has a 2% dividend yield. So that means what everybody hates in properties, but what we're saying is a reality, is actually the same reality with ETFs.
Yeah, that's true. But also the properties is, even if you are in a minus, let's say you're paying a small additional amount, it's not forever. Obviously, you have to perform a rental increase, which you can do every 3 years. By law in Germany, you can go up between 15 and 20%. So when you rent out your property, usually rent it out with a Staffelmietvertrag. So that means it's the easiest way. You don't have to do anything, so it stays really in the contract. After 3 years, we're going to increase, and if that same tenant is in the property, they will automatically pay in 2026 the 15% more, okay? And then by then you're going to pay less, or you're going to be neutral, or you're going to be even in cash flow positive, okay? So it really depends how much money you're paying. And I always believe that real estate investment is a long-term investment.
Yes, for sure.
Probably ETFs and everything is could go faster, right? You
Yeah,
can
it's
also
midterm, yeah.
Yeah, midterm, but real estate is really long-term. Really, after 10 years, you're really gonna see where your property is, and this is why we say do it for 10 years, do a interest rate 10 years, and then you can still decide what you're gonna do.
Yeah. Interest rate which is tax deductible.
Yeah.
And the profits that you make with ETFs, we had a video about this, I think last week or something.
Yeah.
With the preliminary investment tax, that if you don't have ETFs inside a pension fund, if you actually have them only in a brokerage, now every dividend is taxed above the 1,000 euros, you pay 25% capital gains taxes. When you sell the ETF, it's taxed. It's always, you pay so many taxes on money that is taxed already. Because if I invest 100 euros, it's already taxed money.
Yeah.
Right?
Yeah.
So you pay capital gains taxes twice and 3 times and a lot more times. And with the property, you get tax benefits.
Yeah, you got that.
And then it's the question, do you prepare your after-tax return or your pre-tax return? And I'm more a fan of looking at my holistic financial situation, seeing do I have a high tax rate, do I have a low tax rate? And of course, the more money you make, the more you're qualified for properties anyway, let's be honest.
Yeah.
And the higher your tax rate is, so the more I would lean to properties make a lot of sense.
Yeah.
Not only properties, but have a mixed portfolio. Diversification, which is key to investment
Absolutely.
success. I say this in almost every video, and I think I can't stress this enough.
Yeah, no, I would do also, like, how beautiful it is having multiple incomes, like either ETFs, funds, real estate. Why focusing only on one thing? Just do it, or well, we also have the tokens, right? So also
tokens,
great.
exactly. Yeah, they're your cash flow positive, yeah.
Yeah, that's true.
And you can combine it, right? So I have, with the rental income, I have a savings plan into ETFs.
Yeah.
So because I don't need the rental income, so it's immediately invested.
Absolutely.
Okay, then how much time do you have actually? Because you want to finish this one or go through one or more live questions?
Yeah, I'm here, right? So I think we had why are rented real estate cheaper than the free ones? I can tell you that. There's a tenant already inside, right? So it's hard to increase the rent over here right away. Okay, so typical example is Berlin, right? We have that problem with the Mietpreisbremse in Berlin, so that means you cannot increase old contracts, which is kind of a pain, to be honest. And they're cheaper because there is a tenant already. It depends how long, 10, 15, 20 years. So it's harder. If you're having a vacant property and you say, okay, I'm just going to focus probably on young professionals or do a contract for 3 years, then it's just easier because you can charge the actual rent right now. Okay, so you can, in Munich, you can go up to 35 euros or more per square meter. Okay. So I even saw 145 euros per square meter.
Yeah, I think in the U-Bahn they had it that the average is 19 something.
It's gone. Yeah. I mean average, but it's So this is a good part if you're having a free one, and even if you want to sell it, because this is what I get asked frequently. What if I sell it? The property has to be free. If it has to be free, then I can sell it for more. Yeah, probably. But if you did your increasement rate within the years, every 3 years, and you're having a great rent, then you can still sell it for a good price. It doesn't have to be mandatory free or vacant. But yeah, that's actually the one. So look at everything. Also look at the tenant. Look at the tenant, how long. I know it's probably a little bit too personal, even if it's investment, but you want to know. You buying the property, you want to know who's living there. What is the tenant doing? And you can see all this in the rental contract.
Yeah.
So, yeah.
Siavash. There are many properties on Immo24 that offer a Fertighaus. Should we buy a ground for these offers? Then they will build Fertighaus on this ground. Or these kind of offers contain ground as well. I would probably say it depends on the exact offer. And I think there was some Fertighaus question earlier. But generally speaking, that's a very common question too. Do you buy a property, Fertighaus or not, that comes with the ground, or do you buy ground and then build the property yourself? That's a very common question too, which is kind of what you're asking as well. And this again probably depends on the location, because if you're saying here in Munich that you can buy if you have the money here in Munich or in any other A location or suburb, then you can certainly buy a house, a pre-built house.
Yeah.
Or that someone else a property developer will build for you, like the ones that we have on the German real estate marketplace. You could buy one of these properties in real life, I mean. And can you buy ground, even if you find someone who builds a property for you on this ground? In an A location, probably not, or it will be super massive expensive. So this is, I don't think that this is mainly a what do you want question. I think this is mostly a what is actually available question. And based on this, then you can see what's available and then maybe go from what's more affordable. Because I don't think that in all around Germany you even have the choice.
Yeah. And also, let's get the example again. Munich, if you're buying just ground, make sure what cities can grow quick. Okay, Munich, for example, has all this, stupid restrictions. Even if you want to expand a little bit, you have to go through the city. You have to get approved this, that. So this is, I mean, even if you buy ground, it will take probably some time till it reaches there. Everything is super long prepared here in Germany, so it will take time and time and time. But yeah.
In German, bureaucracy,
Paperwork.
And you're doing it yourself with the language barrier. I don't even know what one needs to do.
Yeah, I'm a fan to start small, just simple, smaller.
Yeah, people. That's kind of the last question that we have for today. Later on, people are always going to get very creative. With I buy ground and then I build this and that on it, and I would also that's how I started too. Just buy what 90% of all people are doing: a pre-built flat, good quality, decent price, and just. There's a reason why 95% of all people are doing it, and most of them succeed at least on a decent level.
Yeah, and you will spend so much time thinking about it as well. You will think about it, you will spend or lose time to look for the right ground, let's say that way, or the right property. Or this is what I also always talk, the perfect property. Because I'm, having clients that say, it has to have a balcony, it has to have this, it has to have this. There is no perfect property.
For an investment even?
For an investment. I always say, I'm wearing glasses, but I always say, put your investment glasses on. Put it on and see through and say, hey, I can imagine that someone can live here. You can go by your personal side too. Okay, I could imagine to live here, but it would be nice to have a balcony. But it would be nice to have a window in the kitchen, but it would be nice to have a window in the washroom. Yeah, it would be nice. But then do it for your primary home. For your primary home, try to do as perfect as you can, which is not going to be, but still nice. But for investment property, just see the numbers. This is what matters. Really, numbers. Location and numbers. And by then, imagine you're spending so much time and months and years, great deals are going, and you haven't started. And then interest rate is high, prices are going to increase, and then you're going to think, damn it, I should have done it, right? So
I mean, I don't want to talk about the Düsseldorf property all the time, but that's at least the one that you guys know. I bought in a suburb of an A location. I bought a 2-room flat where singles can live in it, couples can live in it, small families that just got a child and are looking to move into a bigger flat can live in it. Just by the most standard possible.
Absolutely.
2-room, 3-room, good location, the most standard stuff possible. No penthouse, no whatever, with just standard.
yeah,
Gives you the most chance to find a tenant.
Yeah, and even if you say, if you like, we live in Munich, and obviously we're looking also in Munich, but as Axel mentioned, it's just different on price what you get there instead of in a B area. Like B areas, we talk about cities around these bigger cities. So what I was gonna say is that sometimes it's not the right property here in Munich. We can, like, it doesn't make sense, right? And then you just have to go a little bit outside of Munich, outside of Stuttgart, outside of whatever, Berlin. You have to really kind of scope your search field, because it doesn't make sense just to focus on one and I'm gonna find it and I'm gonna find it. And believe me, I have constantly clients that come to me and say, oh, I spent 2 years right now looking for a property. But
Meanwhile, prices have increased and increased right in front of your nose.
Yes.
Let's do one more live, and then you're gonna talk about energy, big topic.
A little bit. But I'm not gonna talk too much, because you said I'm gonna get screwed up over here on the comments. I don't wanna.
Well, we have a quick one.
Yeah.
Do you get tax benefits in Germany if you get real estate income outside from Germany? We say a lot of it depends, but here we can say no. And it may be even worse, that you may have to pay taxes on rental income that you got outside from Germany, here in Germany.
Yep.
So if you want tax benefits, the property has to be in Germany.
Yep.
And since, I mean, we've been live for quite some time, and you're like the best supporter, so I can shed a little secret here. Yesterday, I shot a little over 2 hours interviews with a tax advisor, professional tax advisor. And we also talked about investing in real estate and the tax benefits for it. And there, I learned something new, that it could be that your real estate income from outside of Germany accounts to your income that you're already making, but it's not taxed. So there's a difference, which I didn't know too, that let's say you make 50K from work and 10K rental income outside of Germany. Then Germany taxes you basically as if you made 60K, but the rental income per se is not taxed. So it stays tax-free. Or, and this depends on the country with double taxation agreement and all the type of stuff, I already forgot it, but the videos will come mid-May, and then there's a professional tax advisor telling you stuff, not me, who knows nothing about it, that if you make 50K work income and 10K rental income, that Germany also not even says you made 60, but also wants taxes on that 10K additionally. So those two options basically exist. So if you're looking for tax benefits, which if you really understand real estate, it's a big tax game, buy a property in Germany, which also makes it easier to finance, because financing a property outside of German borders is going to be impossible.
Otherwise, if you're familiar with that country, okay, but I guess probably so you're in a European country, right? I mean, US double taxes as well, so you have to be careful with the double tax. Yeah.
Okay, inflation is in everyone's mind anyway. Vanessa will tell you something about the high energy prices.
Well, the energy prices, I mean, we don't want them. We don't want them, but we have them.
And it's probably only gonna get worse.
And you know what? Germany is actually it's actually the only country, right, who has that huge energy prices. No?
We have to, I think, yeah.
It is.
I don't want to spread any rumors, because it's usually your guys' job, but I think that Germany has one of the highest energy prices in the world. Yeah.
So this is what I say: the rents comparing with other countries are still low, but the Nebenkosten, which is actually the other things, are very high. So energy costs. But yeah. I want to talk a little bit about what is waiting ahead for us. So, because people come up to us and say, how is this going to look like with the energy? What is going to happen with the heating? Do we have to change everything? So all this type of questions, as Germany has older properties, and we talked about that. We have 1900s, like 1910 property here. We have 1950s, 60s. They're still good, but again, check everything. What the German government recently said, I think it was last week or March. Yeah, it was in March, end of March. Is they had kind of year 2030. By then, everything should kind of be renovated. What it means, everything, more heating system. Okay. Now they had that get together, so they postponed it kind of. Not 100%. I think it was say somewhere here 48% or so. I was on another page. It was probably 48%. They postponed it to 2045.
Which is still ambitious.
Yeah, I mean, come on. Like if you think about till 2030, which is another 7 years, not even. Okay. So they want to do all this by 2030. It's impossible. The demand on living space is so high over here. New buildings stopped to build, right? So this is just insane. So this is why they got together and they kind of said, okay, we're going to kind of do these steps. Okay, so people or the owners have time to 2045. Still, there are opportunities to say you don't have to change the whole heating system. They're creating like kind of these adapters to put it on the heating system, and that what the water can, like from the basement, can pump all the way up on the 4th, 5th floor, or you have on every floor a heating system. So they're kind of adapters, additional equipment what you can put on top, right? So this is also a great point. But still, it's eventually gonna come. And even if it comes and you're having a property, don't be scared, right? It's gonna hit us, right? But don't be scared. It's beneficial. Even the new builds, they have to have these, what is it called? These on the roof, on the
Photovoltaic.
yeah, they have to have these kind of
Solar panels.
Thank you. Solar panels. They have to have them. So even if that comes, you as an investor, as a buyer, you paying every month house geld. Okay. So this house geld goes into a pot of the building or of the property management. So obviously every property manager will calculate. Once a year, everyone comes together. They decide what has to be done. So, and they will see, okay, probably going to do it in 2027. So you still have some time. They still have some time to save, to take it out of the savings, and the remaining amount probably, I don't know how much it's going to be. It might be 5,000, 10, 15. It depends really on the savings, how much is there. This is why it's important to check the savings before and what has to be done. But what I like here is they postpone that thing, and they see really the value that we need living space. So this is what was just gonna mention, that even if you go for a property, try to go for a renovated one if the price is right. Okay. I really like to go more for a renovated one because I'm kind of having a headache-free time for the next 10 to 15 years. I don't have to do anything, and even if I decide to sell it after 10 years, it's still in a great condition, so I can still sell it for a great price. But if you go for okay property, then you have to put money aside to renovate it. So you can be ahead of it, buy a renovated property, and again, you can rent it for hire, you put some furniture, or you go for an okay property, but then eventually you have to renovate it. Yeah.
I agree. There will be another reason for me against the super old properties. I would rather get a renovated one too. I completely agree. Because you never know what these guys in Berlin have in their mind.
You don't know. Every time it's a different thing. And what I was going to mention also, even if that time comes, like even before. So Germany, I don't know. Yeah, probably they don't see that, right? So.
Right.
Yeah. So even there it says that Germany will start. I mean, Germany is starting getting so many people from other countries, but because of this energy dilemma, they will get even more people. It's gonna be kind of a role model from Canada. I lived for quite some time in Canada, and Canada was one of the countries who they actually took people from other countries to help them build the country. Like, and this is what Germany's gonna do. They're gonna take Canada as a role model, get people from other countries, specialize in all these energy things, okay, really educate them. And they're planning, I think, about 40,000 people bringing over here, educating them, and that way they can help them to achieve all this till 2045. Even without the people from outside, they cannot achieve that till 2030. That's another argument why they postponed all that. There's no really specialists in this field. Or there are specialists, but not enough.
So there's actually a new career opportunity here for the people.
Yeah.
Perfinex, the #1 career advisor
right,
in Germany.
Yeah, that's true. So yeah.
Combining property and energy efficiency, yeah?
Yeah, that's true. Yeah.
All right, let's do two more live questions. You wanna get something to drink?
Can I go?
Yeah, sure.
Okay. You want some water? No? Okay. I'll be back soon.
Okay, let's get rid of this question. So what do we have? Do you get tax benefits? No. Many thanks. I agree with you. It is best time to invest in real estate, even though interest rate is higher ratio. Okay. Roshini, so expecting a positive cash flow even outside of Munich is too much. Difficult, let's say. We already talked about the cash flow one, so you can also with the timeline in YouTube, you can also go back. Very tough to get a pre-tax positive cash flow. Very, very tough. Mesa, thanks for sharing valuable information. Can you please provide some information about tax benefits we get as a landlord? If you already have video on landlord tax benefits, I will check that. This video will come with Dirk mid-May with the tax advisor that I shot yesterday. But generally speaking, the way that Finanzamt is looking at, Finanzamt is always interested in what are you doing, and are you doing it anything basically in order to make a profit. For example, working, right? We all do work, and Finanzamt says you're doing this with the intention to make money, which is true. And they look at real estate the same way, that they're saying you engage in real estate as an investment, you're probably doing this with the intention to make a profit. And every time that you engage in any activity with the goal in mind to make a profit, all costs that you have in order to make that profit become tax deductible, like Werbungskosten, the business costs that you can deduct for your job. So what are the costs that you have with real estate? Name one, and then I'll do one, then we'll go back and forth.
The ones you actually pay and then get deducted? You mean that one?
Yeah, all the costs that are tax deductible, yeah.
Property management costs?
Good. Ground purchasing tax?
There's so many, I have to choose.
We can play this a long time.
Well, the AFA-Abschreibung, the depreciation is kind of a goodie from the government.
Depreciation, yeah. Notary. Interest.
You can claim the way there if you drive to that property.
Yeah.
Train, car.
Insurance.
Yeah. You can claim the lunch and the dinner.
Yeah.
Yeah, if it's related to the property, everything, yeah.
Yeah. Repairs.
Yeah, renovations.
Renovation.
Furniture.
Yeah. If it's a furnished property, yeah.
Yeah.
So all types of stuff basically, and here's this also what Dirk said, the tax advisor, that at the end, if you file a tax declaration and say this was my rental income and these were my expenses that I had with these when achieving this rental income, At the end of the day, there will be a clerk in Finanzamt checking it, having probably 5 minutes or something to check your tax declaration. If you have some proof or idea why that would be in relation to your rental income, then try it. The maximum they can do, if you're not, I'm not motivating you to commit tax fraud or something like this. Don't get me wrong. But the maximum they can do is basically say, no, we don't accept that this cost was for achieving the rental property, and then they cut it out, which is not maybe with the lunch or something, that maybe, but interest rate, depreciation, all the big ones, they're gonna accept, period. So try it, and it might work.
Mm-hmm. That's true. You want to do another one here, or you want to jump into...
Yeah, let me take a look at my income question, actually.
Oh yeah, we can do that.
Ah, yeah, that one's pretty good, yeah. That one will also be a lot of value for you guys, actually. Because that is a question that we got a lot.
Yeah.
After, by the way, I just saw it, can we register a company and buy the house under that company name and rent it out from our company? So after this one, Vanessa has one more, I think. And then I have one more, which is exactly this one. So Amir, paid actor. This is exactly what I have prepared afterwards. So what we got a lot is all these questions, basically, how much net salary do you need? We had, like, for example, 1,600. Can you afford to buy a home or investment? Maximum property that you can afford with the income level, and the doctor also, how much post-tax salary do I have to get in order to have a property? So there's no, it depends. There's no real amount where Germany has a law or something that says if you don't have 2,500 euros, you're not allowed to buy a property or something. Something like this doesn't exist. So it depends on your financial situation and the property. Both have to be in line, right? And to help you with this, I think before you even can think of owning a property, you have to buy it, right? And there you have additional purchasing costs, is what we talked about earlier. 5.5 to 15, let's call it rule of thumb, 10%. And this is really good if you have it on a bank account, and you can show it to the bank. Nobody says you have to invest it. Actually, if you have a lot of money, you need to put all of this into the property. Nobody's saying this, but show it to the bank, get the mortgage done, and then you can do with the money whatever you want. If you don't need it, you can invest it somewhere else in ETFs or whatever afterwards. But having these 10% rule of thumb, additional purchasing costs, closing costs in cash is really good. So even if you have 10K net salary but nothing in the bank, it's a lot more difficult than somebody who has 2.5K net salary and 25K in the bank, right? Second case would be much easier. So that's the first way of looking at it. How much savings do you have? Second way of looking at it would be, now you can buy it. Let's say you have you have enough in order to buy it. Now the second question, can you afford it actually on a monthly basis? Because we talked about a negative cash flow thing earlier. And here, really rule of thumb, 6% of the property value is kind of what you have to pay every year. 2% principal and 4% interest. Maybe only 3.5, okay, then it's 5.5% of the, it's not going to make a huge difference on a monthly basis, right? It's going to be 10, 20, maybe 100 euros different or something. That's not talk about enormous amounts here. So 6% per year. If you buy a property for 100K, 6% would be 6,000 per year, which is 500 per month, right? That's kind of what you can expect. And then, of course, the question is how much rental income do you get?
Yeah, and also the household calculation. First, you have to really see your financial status. Is what usually the bank does, or your financial advisor, or we say this is how much you're making, right? These are your expenses, and assuming these are your expenses, and out of these expenses, how much are you willing, or can you afford to pay in additional payment, right? So even if you're making I don't know, what was the example here, 1.6K or 2K net, obviously you're not gonna go for a 500K property, okay? So even if you're having the down payment, it still doesn't make sense, right?
Yeah.
And as Axel says, you don't have to pitch in with the whole money. Just show it to the bank, do what you need to pay, okay? The additional cost, the Kaufnebenkosten. But yeah, you just have to kind of be realistic, let's say it that way, right?
I mean, the 1,600 net here, this one.
Yeah.
This one is actually a good example. When we come to the 6%, we had 500 euros per month for a 100K property, right? If he would buy or try to buy the 500K property that you mentioned, then we just take it by 5.
Yeah.
So then it's 2,500 only in mortgage.
Exactly.
It's like 900 euros more than his net income.
Exactly.
It's not
Doesn't
gonna
make
work.
sense.
It's not.
No.
Yeah, it's not gonna work.
Yeah,
It's
the
not
bank
gonna
will
work.
say
Yeah.
no. I mean, you're gonna realize also by yourself.
Yeah,
but
it's not gonna work
yeah.
because you have food, all that other stuff that you have to buy, right? And then I think when we come to, okay, 500 euro for every 100K in property, then the question is, do you buy a home or do you buy an investment property? Because if it's a home, what you probably want to do is have 30% of your household net income as living costs. And that means total living costs. That means your mortgage, Hausgeld, what you mentioned earlier, food, repairs that you have to do, all that type of stuff should be right around 30% of your household income. And not only on the mortgage. And now you're saying, but Axel, that means that I have to earn a lot of money in order to afford a 500K property that you mentioned. Yeah, that's
how it is.
It's unfortunately true. Yeah, it's unfortunately true. That's why you said earlier, rather buy a small rental property and then leverage from there to maybe get the 500K home. Yeah.
But even if you're making let's say 2K, okay, net,
Yeah.
and then you said you bought a smaller property, let's say for 80, 90K, okay?
Yeah.
And then after a year, you're going again for another investment property. Then it's a different story, right? Because you're having 2 investment property by that time, and then you want to buy your primary home. Then the bank looks different. Even if you're still making your 2K net, they're kind of saying, okay, it has to make sense, right? So the other one might be already in cash flow positive. The other one, you already increased the rent, so it's kind of a minimum additional cost, but it's easier.
Because of the free equity that we said earlier, yeah?
Yes, but yeah, I think, to be honest, I don't think you have to make a bunch of money to start with real estate. I think it's just get an expert, get an opinion.
Start small.
Yeah, but even ask us if you're not sure about that, jump into a call with us or write us an email, and we can actually calculate everything for you. Yeah.
And if you want to start really small, here, German real estate allows you to invest with 100 euros only. And then this gives you time to save more money.
Yeah.
And once you get the first profits from the tokens, basically, you can reinvest it or save that towards your equity, towards a down payment. And then maybe in a year or two, your situation will look completely different, and then you may have enough money to buy a property on your own.
Yeah, totally. The most important is to start. That's the hardest way. Again, it's to start. Even if you earn a little bit less than you could earn in 2 years, but at least you started.
Yeah. I heard that if you buy a land to build on it, then you must start building immediately, forced by the city, and you cannot build it slowly at your own pace. Is this true? Could be. Probably depends on the city too, that you get it with restrictions. But I'll just say, and then I'll show your last picture. Building slowly at your own pace sounds to me as extremely expensive because a construction site is pretty expensive. And building slowly at your own pace sounds like a lot of money to me. I think that's a bad idea.
Yeah, now you have to be quick, because don't forget you have to still pay taxes. and you want to make money, right? So it's the same strategy. If you're, it's another strategy. It's a fix and flip. It's a similar thing, right? You're buying a property, you're renovating it, and you sell it. You want to use as less time as possible because everything is money. And same thing here. Same thing here. And even the city, I believe they won't let you too long sitting on there.
Okay, this time I'm not here. Now they can see it too.
Yeah, that's good. That was about the residential, right?
Yeah.
Okay. Yeah, we talked a little bit later before about that regarding residential properties. I mean, you're having the new builds and you're having the existing residential properties, and what makes more sense? And I mean, to be honest, newly builds are higher in price, right? You pay higher in price. You might you have the energy efficiency better than in an older one, that's for sure. The thing is that you have to get a good price for a newly built, because some of them are really like, they skyrocket prices, right? So you have to really see, if you go for a newly built, what is your strategy for that? So with the existing properties, with the residential ones, is more renting it, as mentioned, renovated, furnished, okay? It's called möbliertes Wohnen, so the Sondervermietungskonzept, and or Airbnb. And this is why the government says also it makes more sense to go, or if you go smaller for a smaller residential property instead of jumping into a newly built. But it also depends. I mean, also these tiny apartments are great, right? So this is also an option. But yeah, either you pay a little bit higher and it's kind of, it takes more time to go up with the price, or I mean the value will still increase, but or you go a little bit down in price, right? Renovate all that and rent it for a higher price. So you can kind of play a little bit here with the residential ones. With the new builds, they kind of reached the sky. But even with the new KfW-Förderung, they're also great options. So for newly builds, you get actually more tax benefits if the building is not built yet.
Yeah.
So you're kind of paying only 30% of the, you don't pay taxes on the 30%. So there are ways, okay, and at the end you save some money as well here. Yeah.
And also the higher depreciation for properties after 2024. Yeah. So you were talking earlier about Apple, right? And Apple is a little bit more expensive than other stuff.
I know.
And I think that's the same kind of strategy or personal preference question with properties too.
Absolutely.
Newly builds are a little bit more expensive, yes, but then they're like carefree, like Apple, it just works. You pay a little bit of premium, but then you're done with it. If you buy a property that is 50, 100 years old, then you have all kinds of issues and all that stuff. So maybe return is not everything. Maybe also some people want peace of mind.
Yeah, that's true. That's true. But here also, as you say, peace of mind. If you're buying a property, this is what we do, right? We're having our partners together and they actually manage your property. So this is another good thing. Even if you go for a residential one, we're having the property manager, or you having the property manager who really deals with all the work, looking for new tenants, communication with tenants, doing your Abrechnung, so your
Nebenkostenabrechnung.
Yeah. You know what I mean? Like all the kind of calculation things per year. There is someone who does it for you, and this is great. But if you do everything on your own,
I would also advise against this. So peace of mind, I'll also buy. I only buy with property manager. Yeah. I want no calls from tenants now at 10 p.m.
Yeah. Could you please fix it?
What am I gonna do about it?
Exactly.
I'm in Munich. I'm live streaming. What am I gonna do about your toilet?
Yeah. And a toilet has to be prepared pretty quick, right?
Yeah,
so
or heating in the winter or something like this. Yeah. Some things can wait.
Not only that, but it's also the new tenants, right? Imagine you have to find a new tenant. It's okay the first 2-3 times, but after that, especially like if we go for Munich, Nuremberg, Augsburg, the demand is so high. You're going to have all these applications, and then you have to go one by one. Okay, I want to have a good tenant with a good bonität, and I have to have these insurances to come into the property. So yeah, just I prefer also, even me, if I know that, I prefer just to give it away and say peace of mind. this person is doing everything for me and I'm still investing.
And then you do all that, and I pay 20, or do I pay like 20, 25 euros
Depends on the
for property manager, tax deductible, of course. So it's really 10,
Absolutely.
15 euros net for me.
Done.
I'm done.
Done. Yeah, that's for sure.
Take care of it.
Yeah.
Okay, let's maybe get one more or a couple of more from the live stream, because I also want to reward you guys kind of for tuning in, and
Very
then
nice.
we'll take care about the GmbH. I look very much forward to this.
That's
one.
your part.
Yes.
I had a little bit on it. But
Taxes. Okay, landlord, short-term Airbnb. You kind of touched on it, right, a little bit.
where are we right now? Could you just...
Here, this is the Airbnb
Ah,
one
yeah, okay, thank you.
from Yoda.
Running only short term or Airbnb, pros and cons. You can do that. It brings you more money, to be honest, but there is more work, for sure. And if you're a first-time home buyer, I wouldn't do that right away, because it's just so much work, right? If you have the opportunity, you can try it and then probably skip into more long-term, or at least 2 to 3 years. You can do the contract on 2 years or 3 years, but you can try it out. I just have it recently, a client, he was actually looking at the property today, and it's a 3-room. So we're gonna, it has 1 huge room and 2 smaller rooms, and we're gonna make like a wall, like pull a wall in, and that way it has another room. So that means the smallest room will be rented for Airbnb, right? And the other 2 rooms, they're gonna be long-term tenants. So he came up with that idea, and I really liked it.
That's actually smart, yeah.
He said, you know what, the smallest rooms, we're going to do the Airbnb, and the other ones, we're going to do long-term rent. And he said, yeah, let's see how it goes. But if you're a first-time home buyer and want to do that, you can... I would prefer to start with a just normal rent, okay? And then go for Airbnb, but Airbnb is just faster and more money for sure. It's just you have to be on top, to be honest.
Yeah, more money and more risk, huh? Because if you don't have a short-term rental, because my tenant always pays, my tenant can't move out.
Exactly.
Or,
That's the other one.
and if he moves out, he has a resignation period. So I'll know in advance, and then the property manager gets a new one for me because I don't do it. And if you don't have one in Airbnb, you probably still have a mortgage to pay. So higher chance, but higher risk at the same time.
Yeah, it depends also again on the location.
Yes.
If you say downtown Munich, downtown Berlin, yeah, for sure. But to be on the safe side, try it first with a normal rent.
May I know if we live in the house after 3 years, we can sell it tax-free, or after 10 years? So, of course, we're no tax advisors, but yes, I think that's true. That you can, if you live in it for 3 years, then you can sell. If it's a home, you can sell it earlier, tax-free.
Yeah, that's true. You can sell it.
Okay, let's do one more from Daval before we come to our...
Hey, Daval!
Before we come to our GmbH question.
That's good.
Is it good to buy farm or plots which have really low price without building permission for long-term 20 or 25 years investment near Munich? I think that's again a strategy question. What's the plan really? Because I think what would be the wet dream for every real estate investor. You buy a plot outside of Munich without building permission, without anything, super cheap. Not cheap. The ones in more in the middle of Munich or in eastern Germany are more cheap. But you buy it relatively cheap, and then within 20-25 years, right, city gets larger and larger and larger, grows to your plot. And then you get a building permission handed, and then a property developer comes to your door and says, hey, I want to build a property on your plot and everything. But that would be the wet dream. But I think you can already hear the words that I'm trying to say. It's a lot of ifs. It's a lot of ifs. Of course, it can work, but there's also the chance that... I don't really know if plots without building permission, and no farming on it, because if you buy a farm, then you need a a farmer, or you want to be the farmer yourself, but a farm without a farmer also doesn't make any money. And farms are not cheap. Farms are actually really expensive. So we're probably, if you want to go really low, we're talking about a plot without building permission. And then the question is, and this is what I honestly don't know, what do you even need in order to get building permissions and all that stuff? So probably again, higher profit potential, but also higher risk and a lot more work than just doing the standard stuff.
Yeah, and especially with the building permission, it's not as easy as probably people think. Even a building permission, if you're having a house and you want to kind of divide that and do that, it takes time, guys. It takes time. I know people, it took like months to get the building permission just to divide kind of the house. And imagine getting something like that. So, yeah. It's again starting smaller, and especially a city like Munich, too many restrictions. But yeah, if you're getting a good deal, why not? We're having all these years to kind of look at all this, right? But what's important is starting small, and meanwhile, look at that.
All right, now we come to almost my favorite. I also talked about this with Dirk, and it was the tax advisor, and it was very refreshing that the tax advisor has kind of the same opinion on this as we do. So we have one comment from Aziz and also a live question from Amir. Can we register a company and buy the house under that company name, and then we rent it? Okay, then we rent it from our own company. Okay, that's kind of an addition. Okay. Then it's actually two parts to this. So the first one about, which is also from Aziz, should we buy a property in their name or privately? Doesn't matter which property he wants to buy. The answer is always the same. And then the second one would be rented from your own company, which is actually pretty, these guys are so clever. So where's this question coming from? Probably from the standard YouTube video where it says create a Immobilien GmbH and for tax benefits. Yeah. And yes, it's true that if you have real estate privately as an investment, rental income is taxed the same way the salary is taxed, with up to 42%, which hurts. A company is generally speaking taxed with 30%. Perfinex GmbH, for example, is taxed with 30%. But we're doing a commercial business. So if you have a real estate GmbH that has no commercial business, basically, the only job of the GmbH is to hold property but do no business, right? Then you can get it down under some conditions. You can get it down to 15%. And then we're talking about a huge margin, right? If you can get this one done. 42 privately, rental income versus 15% in the GmbH or UG or AG from company.
Holding, like if you do a holding.
That's the benefit. And this is, I think, where all these questions are coming from. But in order to get a complete picture, we can't only talk about the benefits, we have to talk about the downsides too. And trust me, as a person that has multiple companies, Immobilien GmbH, Perfinex, German real estate, all that, you have structural costs. A GmbH is a formally set up process, or UG is the same way. You go to the notary, commercial registry, all that type of stuff. Jahresabschluss, so like the yearly, the annual statement that you have to do, tax advice, all that. So the GmbH setup or UG setup costs you easily €1,000 with all that. And then it probably costs you 3-4K every year, something like this, with depending on, if you only have a couple of properties, maybe a little bit less, right? But you don't get a GmbH for free. Kind of, it costs you. And then I think the biggest downside, which is a strategy question again, as a private person, you can sell the property after 10 years tax-free. A company can never sell the property tax-free. A company will always pay the 15% tax if it's only like a non-business doing company. And if you buy and sell too many properties, then Finanzamt will even say, now you are a business, then you go to 30%, right? And then maybe all these tax benefits that you could get with the company are all for North. And that's why start small. That's reason number one. Start small privately and then maybe get an Immobilien GmbH later on, because you need significant volume for this. So if you have a property 100 or 200k, don't start Immobilien GmbH. The structural costs will eat all the potential profits that you can make. If we're talking about more than 1 million, 2 million, 5 million, 10 million, 100 million, like all these real estate funds, then of course yes.
Then yes.
Yeah. But below 1 million, no. And this is also for the, this kind of leads then to the second thing, the mortgage. If you want to create a GmbH today and then walk into the bank tomorrow and say, hey, I want to buy a property worth 100 or 200k with a freshly created GmbH that does absolutely nothing. It's not even a real business. Then every bank says no. It took me, and I was self-employed when I bought, when I started the real estate GmbH, I was self-employed for 4 or 5 years. It took me 8 months to find a bank that was willing to finance my Immobilien GmbH. They all said they will finance me privately, but that's not what I wanted. I wanted this with the Immobilien GmbH. It took me 8 months, and we have pretty good bank contacts. So this is, if you have a freshly new one, never been self-employed, never any of this, it's impossible. You're not going to get a mortgage unless, again, you're trying to finance 1 million or more.
Yeah, that's a different story. But also for a GmbH, you have to pay. You have to pitch in, how much? 22, 24,000?
Yeah, usually 25, but you can get in half. Yeah, but this could be your down payment.
Yeah. Exactly. Yeah, that's true.
So if you, and that's kind of the thing. If you finance significant volume, which is at the end of the day the plan probably for the Immobilien GmbH, then banks are willing to do anything. If you walk into a bank with a financial situation, you want to finance 2 million and you can actually afford it, all banks want this deal. But if you want to finance 100 or 200k, which a lot of other people want, and banks don't make a lot of money with it, and then you say, yeah, but I don't want to finance privately, I want to finance with a freshly GmbH and all that, then banks say, no, we have enough people with this volume that are employed, most standard case, we don't need a lot of checking that needs to be done.
Yeah.
They're not interested.
Absolutely.
You're not going to get a mortgage for this. So, second reason, start small, start private, and then see if it goes by 1 property 1 year or 2 properties a year, all privately, and after 10 years sell them tax-free to your own Immobilien GmbH, right?
That's
so this is we talked about a couple of people before the stream that are actually doing this. They buy 1-2 properties per year, small ones, so that they're not income millionaires. They're regular people with a decent salary. They buy 1-2 small properties a year worth 100k, 200k with very little down payment.
Yeah.
And they have been doing this now for 3-4 years, and now they're slowly starting to say, okay, in a year or 2, 3, 4 years, I will create a real estate GmbH, and then I sell them to my own GmbH, and then you can also get a mortgage with it.
Absolutely. Really, everything done, everything said.
Because if you wait, this is what Vanessa said earlier, if you wait and say, I want the Immobilien GmbH, but then you say, why only a GmbH, why not a holding, right? A double GmbH, and why not a trust and all of this? And then you're so far in the structural thing that you're never going to start anyway. So start private and then with the GmbH later on if you have significant volume.
Yeah, and even if you say, okay, after the 3rd property or so, you really want to build up a portfolio. Like this is really your focus, you want to build up a portfolio, then you can think about, then talk to the tax advisor and say, hey, this is what I'm planning, and then you can still see, but really start privately. Otherwise, you're going to end up paying way more money, way more, for nothing. And sometimes also, I doubt it. I never had it, but sometimes it might happen. Okay, I have one property. I'm okay with that. Yeah, I don't want more.
Especially if you don't have a property manager, yeah.
And everything goes wrong. Yeah, but the other side is some people are happy with one property. And imagine happy with one property and they open a GmbH or a holding or whatever and paid so much money, and at the end you don't want more properties. Yeah, it makes more sense if you're having a volume, that's for sure.
Okay, then we're coming to a close with kind of the last questions.
Yes.
I agree the interest rates are still low. However, the problem is that prices are stagnating but not going significantly down. This is actually, I love YouTube so much. If you go back 9 months, 6 months, whatever, this is exactly what I was saying actually. Then when all of you were, or not all of you, you guys seem pretty smart, when some were saying, well, it's all gonna crash and everything, and I said, no, it's not. Told you so. 4.5% interest for a 700K apartment is currently not affordable. Yeah, we had this a lot today, that real estate is expensive. I think the solution for you will be to start smaller. So a 700K apartment, maybe you're talking about a home in that case, then this would be too much for your current financial situation. Then what Vanessa said earlier, start small. Start with a rental, 100K, 200K, pay it off for a year or two, build that free equity, and then scale from then on, leverage and scale towards your home eventually.
Yeah. Or if this is a bigger property and you can do a VG concept here, then obviously you're going to have a better ROI. Even if you're having 4.5% interest rate, you're going to see. So you're not going to be that much in minus. It depends on the calculation. Yeah. But if it's a primary home, for sure. It is, and look at this. If it's a primary home, VH, there is nothing deductible, right? And then I believe it's a lot. 4.5% not deducting is a lot. And this is what we tell to our to people. Why going now for a primary home? Like if you're not necessarily have to move out that property where you are or renting, why you want to go for a primary home right now? If you get a good deal, again, it's a different story, but why? Better go for a smaller investment and you can deduct it.
Yeah. I think this is very similar to a meeting that I had earlier this week, actually, because it's highly highly personal. If we have 700K, which is what you're mentioning, right? And then 4.5% interest, let's say 4.5 plus 2% principal would be 6.5% per year. That means he would pay 45,500 euro only for the mortgage, divided by 12. That would mean 3,800 euros, let's say roughly, 3,800 per month only for the mortgage. Then there's Hausgeld, insurance, water, electricity, internet, rubbish, GEZ, all that type of stuff. And this sounds very similar like a meeting that I had earlier this week with someone who pays currently 1,000 euros in rent and was also about to buy a property. And he calculated it's going to be 3,000 euros for a mortgage. And then I said, okay, then we're basically talking about probably 3,500 euro rent versus buy, because in rent all of this is already included, right?
Exactly.
And then I said, severely think about it, because 1,000 euros renting, yes, it's a waste of money. I know what you guys think, it's not. But 1,000 euros wasted, but still you have 2,500 euros more that you can invest.
Yeah.
And if you buy for 3.5K, I don't know. I mean, I'm renting, but I would rather rent for 1,000 euros and invest 2.5 and buy rental properties with it, or ETFs or German real estate or whatever, than having a home for 3,500 euros.
Absolutely. And even you might not understand it right now or imagine it right now, but after 10 years, believe me, yourself, you're going to be thankful. Yourself is going to thank you, say, good that I did that. And at the end, if people think, oh, a primary home is an investment. No, guys, it's not an investment. that was before. That's kind of an old mentality, to be honest. We live in a time where you have to invest and you have a big burden behind you. Yes, you're paying the rent for your own, but again, as Axel said, your all additional costs were coming to you. There is not a third person, a tenant. You obligate that work to a third person who pays out your debt. How amazing is that? In this case, you're the only one. Later on, if you're not in a rush, just invest your money, build equity, and get that. Because, what I always say, with our own salary, if you were employed, even if you're self-employed, with your own salary, you're not gonna get wealthy. And all these people out there, they're not wealthy with their own salary.
Depends on your on your salary and your definition on wealthy, but
But you know what? It's like,
yes, generally I agree. Most people, yes. If we take the average, then yes, yeah.
yeah, that's what I'm talking about. Like if you were like, I don't know, 3K net or so, like just average in
Which is already a really good salary.
Exactly. This is what I mean. So you kind of have to see where you're gonna go. Probably have a family, whatever. So you really wanna double your money here. Yeah, but.
My mom actually said this when I was calling her like a couple of weeks ago, that she said her house, because they bought a house 10 years ago or something, and now they're looking for a new one. And then she said, yeah, the house is an investment because it doubled in value. And I'm like, great, but what about the other houses around? Because she kind of made the same mistake, right? She said, I bought the house for, I don't even know, let's say 150, and now it's worth 300, I doubled my money. Great, but the other houses around you also doubled in value, so you actually got nothing.
Yeah. Yes, that's...
You can still afford the same as you could 10 years ago.
For sure.
Amir, because we were forgetting this maybe, with renting it from your own company, generally speaking possible that you can buy it with a company, right, and then sell it to, or rent it to the managing director, but you can't do it for free, of course, because then it would be Geldwertervorteil and all that stuff, so I looked at this too. Generally possible, but I'd rather rent it out to somebody else than rent it out to you cheap, because you can't rent it to yourself for zero. Finanzamt is gonna fuck you up.
That's for sure. Devil, yes. Thank you. Oh, you can do the last one.
Okay, Mizam, who had amazing questions today. You'll also be granted the last question of the evening. If we buy 2-portion house and rent 1 portion, can we have tax benefit as a landlord? Yes, so Finanzamt is basically looking at this, our tax authority, Finanzamt, my best friends. If you're watching,
I'm getting like you right now.
Yeah.
Like with.
If you're watching Finanzamt, I love you very dearly. I will dream about you tonight. Finanzamt is always looking at this individually, right? It's kind of the same way if you have a two-party house, or if you, for example, what you mentioned earlier, the WG concept.
Yeah.
If you take 2 rooms for you and 2 rooms you rent it out with Airbnb or something, we had this earlier, so let's try to combine everything here. Then Finanzamt looks always at how much is rented out. Mostly they would probably look at square meters, how many square meters are rented out and how many square meters do you have, and let's say it's 50-50. To have it easy, then you can deduct 50% of your interest rate, 50% of the closing cost, 50% of everything. So Finanzamt is exactly looking at this half-half. The pro tip on this side, Mizam, if you want to buy a house for yourself and you know someone else who wants to buy a house for themselves, they're kind of in the same situation, kind of want to buy the same stuff, then overcross, like we do this also with the term life insurance. You buy a house and rent it out to your friends, but it can't be like neighbors. Then Finanzamt will find this out, that you declare costs for for the property right next door. They're not going to accept this, but maybe 2-3 streets aside or something. You buy a property and rent it out to your friend. at very cheap prices. It can't be zero, like we had earlier with the managing director. That doesn't work. But you can rent it out at a quite low price comparably to the region. And your friend buys one and rents it out to you. Because then you both have investments. You can deduct all of this from the cost. It's much better if both of you buy individually a home for themselves.
Yeah, that's for sure. Because this strategy, or I mean, not strategy, if you find really a house where you live in one, you rent the other one, yes, as you mentioned, it's costs are tax deductible, but it's super hard to find, to be honest. I haven't heard it that much that it is works. Sometimes, yes, I heard, yeah, I'm living on the ground floor and I'm having tenants on the first floor, but most of the times it's so hard to find. And again, here, if you have that vision, you want to buy a house, you live down there with garden, it takes time. It takes really time to find such a house, to be honest. Yeah.
And not sure about you, but I'm a fan of separating it. I have investments like the one in Düsseldorf.
Yeah.
I live here in Munich, totally attached from each other. I'm not gonna move to Düsseldorf and say, well, but do I like it? No, because eventually I will move in this myself. No, it's completely attached.
And you know what? The other thing, what I'm thinking right now, you're having a house, you're having, down there, big apartment, and up there is your tenant. It's super picky, right? So it's like your own house. Everything has to be beautiful and perfect. And if anything happens, you're going to blame the ones above you, right? So it's kind of an emotional thing too. So as you're saying, 2 pair of shoes, better separate. But yeah, for some people works out, right? So.
And if you're the guy living above, renting, would you rent above your landlord? Because you know what this means, right? That he will...
Yeah, I don't know.
Especially if he's a German, he will be very strict about everything. So I don't think I would want to live in a...
Ruhe bitte.
Yeah.
Yeah, but yeah.
Personal preference.
Yeah, for sure. Awesome.
All right,
Perfect.
guys. Thank you very much. Misam, we thank you and everyone else for watching. I don't think we didn't do any live streams in 2022, but this was a very cool session. Thank you, Vanesa, for being here, and thank you guys for tuning in. This was very, very cool, and I think we'll do this more often. Huh?
Yeah, we're gonna do it. It was awesome. So many questions. Thank you for that. And yeah, if you have any other questions, or if you're not sure,
comment below.
For sure.
The video will stay online. Comment below, and then we already have some questions for the next session.
Perfect. Awesome.
Cool. Then
thank you. Have a great
stay healthy
evening.
and have a good one, guys.
Bye.